Welcome to Core Invest Market Insight series, and today we are going to share with you something very interesting.
Yes, top highlights now, which is basically pandemic. Everybody is like, what's going on? Has been around for so long. What are we going to do? So we're going to talk about today Covid-19, coronavirus, and the healthcare sectors.
Yeah, and of course, whether what kind of companies are looking at the vaccine. And I've been investing for more than 10 years and have been in the hedge fund industry, and this is where I want to share my experience.
For me, Wai Min, I am in the corporate world, mainly basically healthcare companies for the last 28 years. For 25 years, I have been doing investment in stocks and options. About 3.5 years ago, I went into full-time trading, and that's my job. And of course, in our free time, Jeremy and I, we teach stocks and options.
So what is the topic for today, right? So there are 5 main topics here. What is happening now? I believe many of you know, and how does it affect us, right? And then after that, we are going to talk about the healthcare stocks, what can we do, and what are the news updates.
Okay, as disclaimer, whatever Jeremy and we are sharing here, it is of our speakers' personal experience and capacity. They are not of any form of recommendations. They are only for your education and entertainment. Please do your due diligence. And of course, past performances has no guarantee on the future outcome. Everything here is copyrighted. Please do not circulate, copy, or duplicate any of the contents here.
Okay, so now when we look at the current situation, we are looking at COVID-19, okay? And this COVID-19 situation has affected and impacted many people. Why? Because it's airborne. But don't forget, we have many other different kind of different type of infections and bacteria, right? And currently, as of these 3 boxes, as you can see, we also have HIV still on, and also MERS, right? So we cannot forget about the different bacteria, and not only just concentrate on COVID-19. But then COVID-19 is one of the most serious cases because it is airborne.
So looking at the impact of coronavirus COVID-19 in the world, so you see worldwide, there are about 35 million cases, of which 1 million cases of death. Look at US. US actually contribute to about 21% of the total impact. So 7.4 million cases, of which 200,000 of death. That is equivalent to 21%. So you see, it's actually a huge impact coming from the US. Comparatively, in Singapore, we have about 8,000 of cases with about 27 deaths.
And you can see that be it COVID-19 or any other different kind of viruses, you can see based on the MSCI World Index itself, no matter what kind of viruses, we can still see that the stock price, the market price continues to go higher.
So from the market perspective, you know that since the 20th of February, when the market actually dropped so hard, and in 4 weeks, it dropped 1,200 points, ended sort of the bull run of the past 11 years. And of course, then nobody know how the market will be reacting and how far it will drop. But we could see that in about 6 months, the market actually rebounded and recovered into a V shape. In fact, like a 90 shape here, and it has gone back to its height. And over the last couple of weeks, market has come down again in view of the general election.
All right. So according to the World Health Organization, let's take a look into a further understanding about this COVID-19. Okay. So what happens is that it spreads primarily from person to person. Droplets released from someone who is sick, and then his sneeze and cough can land onto anyone on his mouth and noses, and that is where the COVID-19 get in contact with that person. So we can see that COVID-19 is actually airborne, which is make it one of the most dangerous kind of infection itself.
So for many decades now, this is one of the worst period because the coronavirus is so infectious. It has actually impacted the whole world. And what kind of industries are affected due to the social problems that we have, and also how to prevent further spreading of the disease. So things like cancelling of mass events, they are affecting many industries. Social distancing as well have also reduced the number of people going out, and also working from home have increased, implementing more of the confinement measures. All these activities and prevention has actually affected many industries around the world.
Yeah. So most of us probably get affected, cannot go out to have, group lunch, dinner with friends. And that is where many different kind of sectors are impacted, right? All right, which comes down to that sector, right? And this sector itself, we want to look at which sector is badly hit by the COVID-19. As you can see, the impact of probability of default based on the corporate side, right, is actually much bigger than the small and medium-sized enterprise. And it comes down to the part where the passenger transport is the worst hit, then to the hotels, to the non-food retails, house construction, and the many others over there.
So because of the pandemic, more people are staying at home. And of course, industries have also moved many of the employees to work from home. Many of the companies are also downsizing. And we can also see that the co-working spaces, people are not going to the offices, and perhaps it might be even affecting, future leasing. So let's look at the next slide. You can see that this is a data from JLL, Jones Lang LaSalle, and this is on leasing data. It has been very, consistent until Q4 2019. Okay, so the last three bars there, Q4 19 starts to drop pretty drastically. And if you remember last year, right? Last quarter, more and more cases are coming up, so people have started to stay at home, and of course it progressed into in December during the cold months, more infection, more death as well. Then you can see in Q1 drastic drop, and worse is Q2. So Q2 with the latest data, it has dropped to almost like 25% of the previous high. So this is really impacting on many of the properties. REITs are deeply affected, as you can see. And I'm sure because of less leasing, governments are also getting less revenue. Potentially, this might even increase taxes on the consumers.
Yeah. So this is another report that is based on the FTSE, right, on the Real Estate Index series, where we can see on the REITs itself, right, this confirms what was mentioned earlier by Wai Min, in terms of the total returns. You can see that the first quarter of the REITs itself, the first quarter of the year, you can see it's mostly February, March negative, right? April is a little more positive. And if, say for example, that this continues, right, what will happen to the property sector itself? So let's look at this news itself. Like, more big employers are talking about permanent work from home positions. So what is the impact of this? You can see that if like big companies like Google, like Facebook, or companies like Apple, if they were to bring their employees back at home to work, it means that there will be lesser space required. It means there's lesser operating costs for these big companies, which is good news, right? Good news for the big companies, but it's bad news for the landlord, right? So if that's the case, we can see that if for the employee point of view, working at home means that they have to eat at home, and they also have to pay the utility, right? So the expenses for individual employee will increase, whereas there will be a decrease in operating costs for the employers. So in time to come, there may be a possibility that employees may start to complain that their pay is not enough, right, to sustain their life, right, if they are continuously working at home. And you can see at the bottom picture over here, you can see that even WeWork, such a big co-working space, skip April rent payment for some US locations. So as what we can see over here, we want to understand that if this continues, if this COVID-19 is not solved, then this situation of landlords or real estates will get worse and worse.
From the aspects of consumerism, let's look at this data. This is looking at e-commerce, right? And in commerce, you look at the bottom part, the blue color, consumer discretionary. These are the luxurious goods, and they are being heavily affected. Things like luggage, what else? Cameras. What else do we have there? Gyms, parties, all these things, because of social distancing and also with limited movement, they are going down. But on the other side, which is consumer defensive, these are the things that we need on a daily basis. So you see that because of working from home, people begin to cook more on their own. So more cooking, more sanitary products, and these are the consumer products that are continuing to be on the rise. So you can see the disparity between consumer defensive companies versus consumer discretionary. So this will give us some kind of guidance in terms of what kind of companies to invest on as well.
Right. So, I mean, you talk about e-commerce, and also we can see that anything to do with internet, anything that is home-based will actually see a good rise in profits, right? Something like Netflix, Spotify, and so on and so forth, Disney Plus, So these are companies, these are sectors that actually will tend to rise in market price because they are actually more profitable in this COVID-19 situation.
And of course, those the e-commerce platforms, right? Like one of the biggest, as you know, Amazon, Alibaba, eBay. These are the companies which have got very strong future. And of course, pandemic is going to be not on the short term now. Looks like it will be, a second wave coming, as we said, and potentially more companies, more countries are being more careful and might continue for some time.
Yeah. All right. So much about sharing about how does it affect us. Now let's look at the sector, the healthcare stocks, and what can we do and what are the news updates, right? So based on the sector itself, of course, we are looking at the US market in the S&P 500. The total market cap for S&P is actually 28 trillion, right? It means that per company itself is averagely about 56.36 billion. Okay, so in this S&P 500 itself, is actually, you can see that it's actually differentiated into 11 different kind of sectors. And talking about COVID-19, we are talking about healthcare, the vaccine. We are talking about the second biggest within this S&P 500, 14.6%, right? So if you are looking at healthcare, you are actually looking at a very big sector, which is the second one among the 11.
So then let us focus on the S&P 500 top 50 companies. There is an index called the Russell 50 Index. The ticker symbol is XLG. And you can see that of the top 50 companies, it contributes to total 55% of the S&P 500. This data is of October 2020. Of the top 50 companies, 9 of them are actually healthcare companies, being the second biggest sector. And of all the 9 companies, 4 of them are directly related to COVID-19 vaccines. They are Johnson & Johnson, Pfizer, Amgen, and AstraZeneca. So these 4 are directly related to the pandemic. The other 4 have some sort of relationship with the vaccines, but of course, there are other comorbidity areas where they also need pharmaceuticals. And who are they? They are United Health, they are Merck, MRK, they are Abbott Laboratories, ABT, AbbVie, ABBV. So these are the other companies, including Novartis, NBS over there. So total 9 healthcare companies.
Yeah. So in the healthcare sector itself, these 9 companies is broadly actually categorized in terms of healthcare is categorized into 2 large areas. Number 1 is actually the medical device market ranking. And you can see that United Health Group is the biggest over there and is part of the S&P 500 under the healthcare sector, right? And other than the medical device, the other part will be the pharma, right? The pharma, and this is where we are talking about the various companies that we mentioned, like Pfizer, J&J, Novartis, AbbVie. They are all there, right? They are all there. So it shows that we are looking at big, strong companies, right? They are listed in the the sector of healthcare in the S&P 500. Yeah, so that is where you can see that currently there are 9 pharmaceutical companies looking at it. Actually, there are more. Okay, but in the US itself, we can see that like J&J, Pfizer, Moderna, and then AZN, so and so forth, they are all looking at building creating the vaccine. And we hope that by end of this year or early next year, they are able to get some results, right, from the tests, the trials and all that, and go from phase 1 to phase 3. And hopefully, once the vaccine is out, things can get to normal.
So in fact, Jeremy, can you go back to the previous slide? So in fact, in this period of pandemic, maybe it is also advisable for those who are interested in healthcare companies, do follow these 9 companies, look at the development, look at the charts, it will be quite interesting to see how they are moving in the next 6 to 12 months. In fact, if you look back in the past 12 months, also very interesting observation. So let's look at the next slide. You can see that we focus into these 8 companies. Those in green, as you can see, okay, the green, Amgen, $257, and it has recovered from COVID, and in fact, slightly moving, on a primary trend of a bullish trend. AstraZeneca AZN is $54, also fully recovered from the COVID dip. In fact, it has gone up, with a surge, but then it has come back to a consolidation level, which is still higher than the pre-COVID height. Next, we look at Moderna. Moderna, this is a company, is very interesting. It is also a very young company. It is only incorporated about 10 years ago, since 2010, with a market price of 72. You look at the graph. Just not too long ago, it was February. In February, the price was about $20. See what happened when the COVID hit us? It shot up to about $95, more than 4 times the size. And lately, it has been consolidating at about $77, $76 over there. So a very interesting progression, and potentially it is also has some good future over there. So what does Moderna do? Okay, it is a $27 billion company, considered a large cap. They manufacture and research and doing clinical trials on vaccines, on cardiovascular, heart diseases, as well as immuno-oncology in cancer. And they also have strategic alliances with AstraZeneca, with Merck MRK, and also Vertex. So they have got very strong strategic alliances and a vision in the future. So interesting company, Moderna. Next, look at NVAX. Okay, NVAX is Novavax. This company has been incorporated since 33 years ago. So it's a pretty established company, and it's a mid-cap of 6 billion company. Mid-cap being between $2 to $10 billion company is mid-cap. Look at the progression of the price. It was only $5 early this year in January, only about $5. And look at it now. The price today is $110, but the peak was $190. So it has gone from 5, shot up to 190, and now consolidating at 110. What it tells us is that its potential can be between 110 up to 190. Looking at the development of the vaccines, and Novavax is an interesting company to look at. What kind of vaccines do they manufacture? They're very specialized in vaccines, and they have solutions for Ebola, for MERS, and now looking into COVID-19. So very interesting development for Novavax. Additional information on Novavax, okay? We have an app called the Legends of Investing LOI. And for those of our friends who are using the LOI, you can actually research on it. You click on NVAX, and information from there says that the fundamentals are pretty weak over there. Okay, as you know, pharmaceuticals, vaccines, they do a lot of research as well as clinical trials, and all these things cost huge amount of resources, time, and money and investment. So because of that, then the fundamentals are not very strong historically, but because of the huge increase in the price level and also potential sales coming up from the vaccines in future. There's a frenzy buying of the companies, and looking at it could be potentially over speculation. So do keep watch, be very careful about the company. Although it has gone up very much, the fundamentals are pretty shaky. Good for the future, but at the moment, just be a bit careful about looking into the NVAX, comparing the technical analysis, which is very bullish. Fundamentally, it is still pretty weak. Okay, a word of caution over that. Next one is an extremely small company actually. It's called DVAX. Okay, DVAX, it is noted as in blue color. Blue color as in because it has been consolidated for a while, but interesting to look at. Let's look a little bit more into detail with the DVAX, which is Dynavax, $5. So this company is a small cap company with about 480 million market cap, and they manufacture Hep B, and of course today looking into clinical research on COVID-19. And it's a company which is fairly long, about 20 years old, and doesn't grow very much, small cap, and interesting for us to look at it. So apart from these companies, J&J is also at a consolidation level of 147, very strong, huge company, one of the top 10 of pharma and also top 50 companies over there. And then Pfizer at $36. It has more or less recovered, and you can see that it has been volatile over there, and lately it has been slightly on the consolidation and even slightly bearish for that matter.
All right, so talking about all the different 8 companies that we mentioned, so what can we do? So from our perspective itself, what we can see that because US election is coming, COVID-19 is here to stay, there are potential second wave, third wave may be coming, and that is why we have to really understand what is the market looking at based on it. So in terms of what can we do, right? We are looking at short-term price action. Okay, all right, because it's very volatile. You do not want to go against the trend. And then many pharma companies are looking and researching the COVID-19 vaccine. So we are not sure which company to invest, right, medium to long term, because it could be private companies taking up the challenge and getting the vaccine out, right, rather than the top 5, top 10 in what we mentioned earlier. It could be many different kinds of private farmers, right, all around the world. Okay, and whichever one got the vaccine out, that will be the one that will spread across the world, because so many people are impacted, and we are not like going to stop it from actually moving from one country to another. Okay, and what we can do is also to wait for election to be over, so it'll be less volatile. Right, as if you are not sure what we are talking about in terms of election, you can always go back to the previous series. Right, we have a series on the Donald Trump versus Joe Biden, right? So take a look at that because it's an interesting one, and keep up to the market updates, understand the election, understand the COVID-19 and what is going to happen for different companies. If you are not sure what to do, it's always good to preserve cash. And if you do not know what to do nothing, because doing nothing is also doing something.
So we hope that this session has been fruitful for you. And hopefully it has given us some ideas of the overview of what is the current situation, and also potentially what is going to happen in the healthcare industry. For more information and news and updates, there are 2 QR codes here. The one at the top there, this is the Core Hub. You can actually scan the QR code there. It's going to corehub.me to World News. So this is a public site, and you can continue to get updates on all the latest news over there. And you can also join us on Facebook. This is a closed Facebook group. Join the, you can scan it or go to the Modern Power Investor Options. Also there, we have a lot of interactive sessions, and there are a lot of these live Facebook sessions over there to update all of us here. So do join us on news and updates.
Thank you very much for watching today's market series itself. And we hope to see you on the next one. All right. And bye-bye.
Thank you. Bye-bye.
Bye-bye.